Good morning, David here. Weekly Week Look. Today is Friday, 8th of July, 7 a.m. in the morning, and we'll look through the world wheat market and look at UK. Firstly, we've got the US. We've got the yearly chart in front of us, and you can see here we're looking at a level of $425. This is back in 2009, and we just pop down here, look at our daily chart here, and you can see we're trading at 426 here. So breaking below the 2009 level, and since my last report last week, the US wheat market's fallen 30 cents. I work on an estimate of practically sort of £1 for every 5 cents on a usual market. So on a base of that, then the UK wheat market should have fallen £6 a tonne during the week, due to the world, US wheat market falling down. If we then come along and look at corn, corn a low here is 350, and back down to 2008 levels is sort of 317, 320. And if we pop down here, you can see that corn is down here at 340. That's broken below the 350 level. 350 level being the last support here for the last 3 years. So that's putting adding pressure on the wheat price. Then we come down into the Matif and the Paris milling wheat. Now, obviously, there's a premium on this because obviously this trades at on a milling wheat spec, where we're looking at the Chicago wheat and the UK wheat on a feed wheat spec. So we just have a look here. You can see 150 euros is the 2014 low here, and at the moment we didn't come down to make the 150, and though we've had a fall, it's starting to rise up again, and at the moment is at 158. And then finally we'll just look at coming on the UK yearly chart here, and you can see we've identified this sort of sideways trading range here on the yearly chart, and obviously we were coming into crucial to test this 120 level here. So we just look at the 120, and you can see here last night we closed above this. During the week here we obviously fell back down here, and that follows obviously the fall within the US meat market. So basically we should have seen a fall of £6 a tonne, and instead of that the UK wheat has gone up £2 a tonne. Obviously if we hadn't got the differential of the reduced in sterling at the moment, we should be seeing prices for wheat down here at 108 to 105, but obviously due to the the weakness in the sterling, so we just pop across and have a look at what's happening. If I use the pound versus the dollar to show what's happened, and you can see here, this is my yearly chart while moving in the mouse at the moment. We're now going below 1981 levels. We last came out of the monetary system in 1992, and we're below levels that seen there. So basically what it means is because the currency, because we're not sort of looking as though we're in part of Europe, I feel that we've gone back to the old days of wheat trading where we were against the Deutschmark, and obviously that is going to follow on now, and what you're going to see is a very volatile market. And I know we've got to keep an eye on the world wheat price, but at the end of it, if we get this differential due to currency, then obviously that will kick in the opposite way, and we'll float on our own because we've just got a surplus to get rid of. At the moment, if you work on a pound versus the dollar, I work on the assumption that every pound versus the dollar is a move of £1.20 equals £1 a tonne. So basically, this was the low here when we came out of the Brexit here last week at 1320. We've broken below that now with this negative candle here beginning of the week. Obviously we've fallen down, so obviously that's why we've seen the kick in the UK wheat market, and obviously that's given us the rise back over the 120 level, and obviously has given us even more than that when you think that the US wheat market on the world market has fallen £6 a tonne. if you estimate that we could now drop down to 12,400, so this is pound versus the dollar, so that would be another fall of 5 points, 500 points on the sterling. So that would give us a £5 a ton advantage on the UK wheat. So basically, that would take us back up over the swing high of 100. And if I go back on here, so basically £5 a ton here would take us over this high here. We'd then be breaking out over this range here, and then we'd be looking at a sort of a breakout trade. And obviously, if the currency continued lower, we could see back up to 130. So basically, what it means is now, as farmers, you've got to look at the main driver indicator is the pound. That will influx the wheat price as much as the world wheat price. And even so here, so I've got my chart set up here for wheat, but in the top right hand corner you can see here that I've got a pound versus US dollar here, and just keep an eye on, you can see here the correlation. Obviously, as the pound has fallen here, moving my mouse over here, you can see that UK wheat's gone up. You can work that against the, if you like to work it against the euro, obviously, I work out about every 106 point move on the euro is £1 per ton on the, so if we take the pound versus the euro here, so we've seen a fall of these 900 down to 600, so that's 200 points on the pound versus the euro, and obviously that's given us the kick of £2 a ton. But obviously you can see here that the pound versus the euro has broken through the support level here that I've got on my chart here, and I'm indicating also that's going down to 11,400. So if you take on that basis, then obviously we can indicate that the wheat market is likely to go up if this continues to fall up to hit 125. The other thing you've got to now consider that obviously you're looking at events that are going to affect the pound weakness. So basically you've got to now be a currency trader or have an indication of what the currency is doing, because obviously that affects the pound. So I use a tradingeconomics.com website, and if you can see here that this morning at 9:30 we've got balance of trade. This will affect the value of the pound. All these events will be greatly affecting it. Obviously, the biggest effect you've got today is you've got the non-farm payrolls at 1:30 in the UK time, and obviously that affects the dollar. So then that will affect the price of the pound, and obviously will also, move the price of wheat. If you want to use this one, it's Forex calendar and it's Forex factory, and obviously you've got to keep an eye on events during next week. So obviously, if you're looking for a day that you're looking to for wheat to rise up, you're looking when data is about, coming out, and obviously key to this is next Thursday, July the 14th, when you've got the BOE Bank of England meeting, where they're obviously going to announce if there's going to be any quantitative easing. The previous they bumped in 375. There's no forecast at the moment, but obviously there's an interest rate decision next week on Thursday, and the forecast is for them to likely to drop interest rates down to zero. So obviously that will greatly affect the value of the pound, and obviously if the pound falls further, obviously then that's going to put the price of wheat. So if you're looking to trade anything on the wheat market, obviously you'd be looking to wait until after the non-farm payroll today at 1:30, or obviously the key to the next week is obviously there's two events. Sorry, the other one I didn't show you on here, which is going to be the inflation rate, which is the following week. That's at 9:30 on the 19th. But obviously the key is next Thursday, July the 14th. So obviously that's going to be, it's got to sort of retrain all our minds to be key to, the key is always now to have an eye on what's happening with the currency versus the pound, and obviously that's why I've got this set up here. So basically, if we start to see a rise here on the pound, then obviously we're going to see a fall on the UK wheat market. But obviously that could all change this afternoon at 1:30, and obviously the key is next Thursday when we have the the Bank of England decision. Obviously, if they start pumping more, you know, money into the system, obviously that's going to change things. And also, when you think about it, I've got to put some more thinking cap on, is that obviously you're looking to buy, with the weakness of the pound, products that we produce in the UK. And obviously, if you look at what you can actually trade on the futures market, obviously heavily is the UK wheat. So obviously that could be seen as an outside investor, one way of going long, funds for buying into wheat, hedging themselves against, obviously, at the moment, but being able to buy cheap a product from outside, because obviously the currency differential. So to sum up, at the moment, we're still in a falling trending market, but we are showing signs of breaking this in the short term, because obviously we've had a close above the 120. But obviously what I'm now saying is we're entering a phase of completely different trading, with daily movements against a fluctuating currency market, which will affect the daily movements of the wheat market. So obviously, though I can sort of tell you what my thoughts are, it's going to be more crucial to watch these main events, because obviously there's going to be some big movements. And obviously at the moment we're shielded from a very low world wheat price, but if we start to suddenly lose the disadvantage of the currency, then obviously this could kick in, and we could see a quick fall to resumption of a catch up with the world wheat price. So obviously obviously keep an eye on those events, and I'll put an update this time next